Welcome back. You're watching Trade of the Week with me, Zinati Guma, and joining us for a QuanTechMental analysis on Richemont, Capitec and Harmony Gold is Unum Capital's Loyiso Mpeta. Thank you so much for your time, Loyiso. Now, of course, as we always do, we've got quite a diverse layout of counters here in the different industries. So we have luxury goods retailer Richemont, gold miner Harmony Gold, and Capitec in that banking sector. So let's actually start off with, just show us a chart to look at the performances of the counters compared to the broader market over the last year.
Yeah, okay. So how are we going to do it this year? I've actually decided to sort of narrow it down and only focus on the most recent performance. So sort of looking at 2 or 3 year data, I'm just looking at 1 year from last year, January, going forward, because so much has changed structurally, both in terms of fundamentals as well as share price performance, that it probably doesn't count for much what these counters have done before, 2 3 years ago. Might as well look at it now going forward. So starting from January and using daily data, you can see here in green I have Harmony, which really was the star performer of the previous year. And looking at it from beginning of last year to date, it's up a whopping 74%. And again, just to emphasize, you can see how this green line has had very, very strong runs, very, very deep pullbacks as well. And then again, another strong run. So it's not a straight line. And when we look at Capitec in orange, it started off as the laggard, the bad performer, dropping down to almost minus 30% mid-year, and then staged a very, very strong, steady recovery, up 11% in this period. And then we have Richemont, which got off to a good start, but mid-year last year then started selling off strongly before finding what could be a bottom towards the end of the year, and then another minor recovery, up 12%. But we know the old share has been struggling over the last 13 months, barely breaking above, say, 10%, and over this period, down minus 2%. So what's interesting to note now when you look at it from a quantitative perspective is to understand the relationship between the return correlations of the individual stock as well as the old share in general. So looking at it from that perspective, running regressions, you can see that Richemont has a beta coefficient of just over 1, so almost the same as the market, but from a return correlation perspective, negligible at 0.5. Capitec actually coming in as a low beta stock with a beta coefficient of 0.86, but also a lower correlation coefficient of only 0.47. And lastly, Harmony with a beta coefficient of 1.07 and an even lower correlation coefficient of 0.35. So all three counters, very, very low correlation relative to the all share index, as we can see. They outperformed the JSE comfortably. But what's also interesting, which I want to emphasize, Harmony being a gold mine, you would typically expect it to have a higher beta coefficient in terms of its volatility. And this is why, again, I want to emphasize the time period that you're looking at, as well as the type of data, whether it's daily, weekly, monthly, has a significant impact on the results that you'll get when applying this quantitative type of analysis. So one should be very careful in terms of how you interpret it, and also knowing the type of data that was used in terms of computing it. Yeah,
all right. Well, let's go into the different counters and take a look at the technical and also fundamental picture. Starting off with Richemont, quite an interesting chart that you showed us there, where we did see a lot of pressure on the stock last year, a slight rebound this year. But I mean, that stock, it's so discounted that it's even significantly discounted when you compare it to its peers in the luxury goods space. But obviously, a lot of analysts will see these pullbacks as an opportunity to buy. A lot of analysts have had Richemont on a buy signal for at least the last year. So just, talk to us about the technical picture and also what the fundamentals are telling us at this point.
Yeah, so Richemont has been quite an interesting one. So we did do a recap I think it was late August on Richemont. And I was looking at this advance from May 2022 as a 5-wave advance for a higher degree wave 3 and I said that the stock had peaked at this higher degree wave 3, and this pullback was for wave 4. Now this pullback went a lot deeper, and we can see from this peak of wave 3 to wave 4 quite a significant drop of about 68%. And now we seem to have caught a bit of a buy opportunity here. So the question is a low in at about 2,157. So time will tell. But what is interesting, which I want to emphasize in terms of the dynamic interplay between fundamentals and the technicals, especially when it comes to earnings results as well as interim performance updates. It's quite interesting when you look at it from Richemont's perspective, because when you look at it right at this peak in May of 2023, that's when they released the year-end results for 2023. Sterling results, sales up 19%, operating profit up 34%, and profit from continuing operations up 60%. But on that very day is when the top was in, and the stock started to tank. And you always remember, I've always said, stocks can top on bullish news. I've mentioned that on a couple of occasions.
Quite interesting,
So when you get a report like this, you would expect the share price to shoot right through the roof, because it's such a strong outperformance report, but that didn't happen. So the stock sold off from May to November, and in November we then had the half-year results. Sales were up 6%, operating profit was down at 2%, and profit from continuing operations up only 3%. So you can see how subdued these results were compared to the year-end about 6 months earlier.
But investors went the other direction.
Investors went the other opposite direction this time.
On those smaller numbers.
Exactly. So the stock caught a bid. But what has caught my attention is the interim report that came out last week for Q3 of 2024. And again, nothing over performance compared to the year-end results. Sales up 8%. 3 months later, earlier, they were only up 6%. But look at how the market has reacted. So the whole thesis here is, on the day that news or earnings or operational reports get published, you're always going to get some sort of reaction from the market. But the market can dismiss or discard this report very, very quickly, and you can see a continuation of the sell-off. So even if you are bullish on Richemont, I will still use this level here at 2157 as an invalidation level, because the markets can discount news very, very quickly and find another reason to continue the sell-off. So as much as I am a bit bullish on Richemont, I do believe that the stock is severely undervalued, but I'm just keeping an eye out on the news flow, because that is what's really driving those short-term volatilities in the stock.
It's really, really interesting to see those numbers coming out, and basically you can't call what investors are going to do, particularly on Richemont. So yeah, very, very interesting. Let's go into gold miner Harmony. They actually, in their last update, seemed that their financial metrics were actually quite good. On an operational level, it seemed output was good. Also, they were operating on a higher gold price, so which boosted revenue. And even costs, the all-in sustaining costs actually fell. So it looks like things are good there. What do the charts tell us?
Yeah, so Harmony has really had a very, very strong run. So just taking a look at the bigger picture, looking at the weekly chart, I just want to highlight that the stock does seem to be approaching a previous significant top, which was that peak in August 2020 after that very, very strong post-COVID commodity boom. So looking at where the share price is now, it is approaching significant resistance. So looking at where we last looked at it back in May last year, the structure has changed quite significantly. Though I did forecast a pullback after this strong rally, we did see that pullback, which was here, but the overall structure has changed significantly. So without looking at it from a wave perspective, but just from a pure trend perspective, the uptrend does look to still be intact. We've got this sequence of higher highs as well as higher lows, and we can see on this wave here as well, we have this lower degree sequence of higher highs and higher lows. Though I must say I am seeing a bit of a concerning chart pattern right here, which is a double top, though very small when looking at it in context of the entire trend, but it could be an early signal that a reversal is likely. But until I see a bigger break of structure, I will maintain my bullish outlook on Harmony. And like you say, from an operational perspective, just looking at it from a gold production as well as those all-in sustaining costs over the last 5 quarters, starting with Q1 of 2023, we can see that throughout the year, Harmony's gold production was very, very stable, consistent at about 10,000, 11,000 kilograms. But with Q1 of 2024, which came out towards the end of last year, they broke above 13,000, which has been their best performance in the last 2 or 3 years, I think. And also what's very encouraging is if you look at that all-in sustaining cost, the trend is going down. So actually they're becoming more efficient in terms of their operations, producing more tons at a lower cost. So when you look at the outperformance of Harmony, it's very justified by its fundamentals at operational level. The question is, we know commodities are very cyclical. How long can the gold price remain at its elevated levels? And that really is the question for 2024. But from a performance perspective last year, both technically and fundamentally, I think the share price is fully justified where it is now. Yeah,
and it's going to be quite interesting also to look at where that gold price goes, because we do know that gold does do well when interest rates are lower. So, of course, we're waiting for the central banks to start cutting maybe in the second half of this year. But also, gold quite important as a safe haven. Seeing though as there are still risks when it comes to geopolitical issues and the like. So it's going to be quite fascinating to see how the gold price does. Let's take a look at Capitec, but on a more technical level. It was also quite interesting to see that chart over there, because Capitec is seen as expensive. And I mean, just as we were looking at the pressure that we saw early last year, some analysts would maybe think that any dip is a good place to come into the stock because it's always seen as expensive. Would you say that that is the situation?
Yeah, so a very interesting one. I think from a valuation perspective, when we looked at Capitec towards the end of last year, and I also showed the valuations from a couple of analysts, it showed it as currently fairly valued. I think for a long time, Capitec has always held above valuations. So it's nothing new for the stock to be expensive. It's really a question of how much higher can it go. And looking at it from when we last recapped last year, towards the end of the year, I said this advance looks like a complete 5-wave advance, and I was looking at a correction in 3 waves. But looking at it last week, when I was preparing for the show, I actually realized that the stock still shows upward momentum. So I asked myself, was that wave count perhaps the best one, or should I come up with an alternative wave count? And then I came up with an alternative one. And in this one, I'm actually looking at this advance here as all of wave 5, which gives us a higher degree wave 1, and then this pullback for wave 2. And with this alternative wave count, it shows that we are now in the early stages of this higher degree wave 3. Now, why I have an alternative count is very important from a behavioral perspective, because as investors, analysts, we can get anchored into our ideas, believing that the market is going to do this and then having a fixated outlook. So having an alternative count says, if this one is wrong, then what is the alternative? And again, it's about thinking in probabilities, which as traders and investors, we always say you need to think in probabilities in the markets, just so you can remove yourself and not be anchored in that one idea that you have. So looking at it from a technical perspective, it does look that the momentum is still to the upside. And looking at where it is now, it does look like it's likely to challenge that previous all-time high, which was set back in April of 2022. So short term, I think Capitec still has some legs to the upside.
All right. Well, of course, that is part of the educational segment there, those probabilities and alternative wave count. But can you only have one alternative wave count, or can you have multiple?
Yeah, that is actually one of the contentious issues when it comes to technical analysis, because you can never really have one fixed guaranteed this is correct. So depending on the nature of the market, the time period you're looking at, and the way that market data always filters through on an hourly basis, daily basis, you can actually have a multiple number of wave counts, which for those who believe in the pure scientific approach to any type of market analysis, some say, well, if you have multiple wave counts or multiple technical views, then that means you can never be wrong. You can always say, no, this one is wrong, and then go to the right one. But at the end of the day, the most important thing is don't get anchored into an idea. If that idea fails or the market gives you new information, be flexible enough to adapt and then move on. Doesn't help to remain anchored when the market is showing you otherwise.
All right. Well, just as we close off the conversation, just a little bit on the fundamentals of Capitec, because, of course, it has had a great growth story over the years, where now maybe some analysts would start to think that that is kind of topping out. Do you think that that could be the case? But also when you look at the current environment where consumers, and particularly their consumers, are really under pressure, would you say that we can still experience more bad news in terms of credit impairments, or maybe that's already done, that's already priced in, and Capitec is on a stable footing?
No, it's quite interesting. I was actually reading one of the reports by PwC on the banking sector.
Yeah.
And it's quite interesting whenever you have the macro outlook of the major banks. They always focus on the big four, and they sort of leave out the Capitec, because they say it's such a retail-focused bank that the fundamentals of it almost don't seem to be impacted too much by the bigger macro stories and all the others that affect the bigger banks. So to answer you directly, I mean, I've never really used Capitec. I don't know many people that use Capitec. And I know that recently, I think they terminated one of their agreements on the insurance providers that they were working with. But I think, you know, there's quite a flexible business that is easily able to build relationships outside of their core banking
like even
structure.
now what they're doing with business banking.
Exactly, you know, so I think there's so much creativity within the management of Capitec that where they see that one aspect of their business has stopped, they'll come up with another revolutionary idea that will spark something new. So the question is, what will be that new idea that they come up with? So when it comes to Capitec, I'm always more interested in what new innovation is coming out, because they're very innovative.
How nimble they can get to eke out more growth. Thank you so much for your time and for your insights there. That was Unum Capital's Loyiso Mpeta with this week's Trade of the Week.